Welcome back to the channel, your home of macro cycle analysis on crypto, real estate, and the stock market. Today's video, we're looking at something that's never before happened in the history of Bitcoin and what to look out for post this event. We have 9 days to go in this particular event, and it does seem like we are about to put in this particular signal for the first time in Bitcoin's history. So let's take a look at what that means to Bitcoin, how to prepare for it, and of course the ever elusive dollar cost averaging into cryptos and altcoins during a bear market, and why that can be an extremely terrible idea, and of course how to plan for that, because what's the point in knowing about this stuff if you can't do anything about it? So let's have a look at what the charts are telling us, and of course the data. Like, subscribe, we love to see what the data is down below to see if you're enjoying the videos. Get that like up there, and of course leave me your comments down below. We'll get to those as well. All right, so the first things first, we have our historical Bitcoin buy zones. In the history of Bitcoin, each of these particular zones have been quite well in terms of a good area to buy Bitcoin for that next cycle. But of course, this takes a lot of time, and if we don't have the patience, it can be very, very difficult to hold in for that ride. In terms of cryptocurrencies and altcoins, a lot of those aren't going to make the next cycle, which is based on previous history. So buying up into these things and dollar cost averaging and what's the next big altcoin can be very, very risky at this point in the market. And I want to show you in this video an area that could be a little safer for those altcoins. So the big thing we're looking at here today is the quarterly returns. This has never before happened in Bitcoin's history. We're in quarter 4 now of 2022. The last 3 quarters have all been red. The first quarter only slightly red. The third quarter also just slightly. We had a massive quarter 2 drawdown, and this quarter 4 is down 13%. Of course, we're still about 9 days out from the close, but these quarters are made up of around 90 days. So about 10% to go in this quarter. Can Bitcoin rise around 13%? If it was able to do that, we would go up probably just past about 18,500, depending on where we close today. For us to get back above around that 18,500, that's a key resistance level at the moment. So in terms of what the chart is showing, it's kind of unlikely that that's going to happen. It would be fantastic if it did. That would give us a lot more move to the bullish side, but at the moment, not looking likely based on the short-term analysis. So this has never before happened. The worst that the Bitcoin year has been in the past is 2018. We had 3 big drawdown quarters, one slight positive in quarter 3, and the previous bear market was also 2014, 37% down, 40% up, then basically 40% down and 16% down. So those last 2 bear markets were the worst. They had 3 red quarters. Apart from that, you had 2 red quarters as the market was finding its base in 2015. And then in 2016, the market was beginning to climb its way out of that accumulation and into the start of the bull market before it went really, really hot in 2017. You can see the same sort of thing happened in 2019. We had that big pump up in that second quarter as everyone got really excited about the Bitcoin halvening event coming up the following year. So that started to lead a lot of cryptos out of their bear markets. But of course, they later came down, got crushed again, and there was no macro confirmation for those altcoins to continue on into bigger gains for that next cycle, unlike a lot of altcoins which came out during the bear market during 2018, 19, and potentially even in the bull market of 2020, 2021. And so moving into 2020, we saw 3 green quarters, 1 red quarter, same sort of deal for the bull market itself at the peak when Bitcoin really didn't do anything in terms of its price action through 2021. You can see here from January, sat around 30,000, closed the month out at 33, and then you finish the year in December down at 46,000. So that was the close there, with the low being around 42. So from an open to a close point of view, nothing much happened in 2021 for Bitcoin. But of course, there are multiple altcoin seasons within that particular cycle. So that's what we're looking at for today. You know, this has never before happened, but the icing on the cake for this particular event is what we see after this situation occurs, what we see after really red quarters in Bitcoin. and then how to prepare for that for cryptocurrencies and altcoins. This is the bull market cycle prior to the cycle we just had. So this is basically the 2016 and 2017 bull market. In previous videos, we looked at what we could expect from the 12-month period of November through to the next November. So we looked at 2022 into 2023, looking at that. So this is what this yellow line is here, looking at previous years. So we're starting to build upon the data for a potential bullish or at least slightly bullish year into 2023 for Bitcoin. And then the following years after that, 2024, 2025, potentially very good years for altcoins. And so the data shows for the year from the November period into the following November, the market was green. So Bitcoin was up, even if it was slightly, from one 12 months to the next 12-month period. So what we're looking at here is the quarters now. So what happens from 1 year after you see a lot of down, which is what we saw in 2014. You can see from the graph here, we had 3 massive down quarters with 1 big green quarter in 2014. And so the following 12 months, basically moving around the lows. And then the 12 months after that, basically the 12 months after the low period, so 2016, you had a pretty good year of the market climbing up, but there was still a lot of negativity in the air and a lot of pessimism that was seen on these particular quarters here, where you start to climb a little bit, but you have a few red months. The same sort of deal here in quarter 3. You're up again. You basically were testing all previous high levels and then putting in higher lows. But for the untrained eye and potentially the retail investor that was getting in early, and of course the news headlines, anytime they see any sort of red day, red week, red month, they call it a collapse, a crash. You know, we've seen the best, now we're about to collapse. But if you're watching a chart, you can see where the support levels come in. And even though it's red, which is a natural part of a market, you know, for a market to go up and then retreat, have a correction, you'll note that the market was finding support at higher prices throughout this period. So although it can look like a lot of red on the chart when you start to climb out of these periods, it is basically the market just starting out in that fresh bull market, which is the best time to be getting in for the fastest profits. Because you can see if you were in the market during the lows, you're going to have the best returns, but it's going to be the most tricky to remain level-headed during these lows. Similar to what we're potentially seeing right now. This is absolutely the most difficult to navigate at these lower prices because we're hearing of lower targets, we're hearing of zero, we're hearing of Bitcoin going underneath any of the previous support levels at around $5,000 or $6,000. Of course, the under $10,000 is the main big one that people are looking for. And so these are the most difficult times to navigate the market. There's a few different types of investors. Personally, I like this area for Bitcoin buying, like I've got here in my historical Bitcoin buy zones. It's going to be a difficult time to navigate, like we've talked about, you know, since June, which is where this low was, the first low at 17.5. The market's only at 16.8 now, so several $100s lower. So not much has really happened, but it's been one of the most difficult times to navigate because of the extreme negativity, the extreme bearishness, and of course, a lot of forecasts of prices going much, much lower. So to be able to hold in there and start to buy and not wait for those times is quite difficult. On the other hand, for cryptocurrencies, we looked at this in previous videos this week. So make sure you are subscribed and like the content. I leave links in the video description and of course at the end of the video on the left-hand side so you can stay up to date. In terms of the crypto market caps, we do have some final zones to the downside. So basically in terms of Bitcoin, things could be relatively steady based on what we've seen in history. We've gone through and looked at the quarters. Anytime we've had a very severe year down, a lot of negative quarters, the following years have basically been years of accumulation and finding a bottom, finding a base, and then start to break its way higher. 2016 was a very good example of that, where the market was climbing higher, but still with some negative quarters. And then also in 2019 and 2020, had a lot of positive quarters here in 2020, especially that last quarter. But it was still extremely uncertain. I was putting videos out at this time on the channel. People were very, very uncertain about buying Bitcoin in 2020 and especially in 2019 as we had some big drawdowns during that COVID period. But those following years, after big years of losses like 2018, had the best returns moving forward. They were just some of the most tricky to navigate. So going back to the total cryptocurrency market cap, all the cryptocurrencies out there, including the stablecoins, the altcoins, Bitcoins, the ETHs, if we're looking for times for dollar cost averaging, for buying altcoins, there is still not the signal there just yet because a lot of these cryptos may not make it. So we're trying to navigate two different types of markets here, Bitcoin and of course altcoins. We want to be getting into something that is low risk. A lot of Bitcoin maxis are made during bear markets because a lot of altcoins just do not make it back through to the next cycle. At the same time, we want to be here to try and make the biggest profits we can, which of course comes from altcoins. It doesn't come from Bitcoin when you have all of these tokens out there that basically everyone is speculating on and gambling to new heights with extreme wild dreams and big promises and hopes that basically never come to fruition. And those coins eventually come all the way back down and potentially more than where they started from. So we're looking at the total cryptocurrency market cap as a potential indicator, giving us a signal for when it might be safe to get back into altcoins. So there's, as I said, two different ways here. You can either hope that your coin makes it out of an accumulation zone and then break higher, or you wait for that break higher, that first little signal out, and then get on board for that last part of the ride. The main thing that both parties have to do here, both different types of investors, is stick with the market through the tough times. One will have to stick with it and then hope that their coin doesn't break the lows. That is very high possibility of old altcoins, anything that's been through the cycle of 2021, or they continue to watch and wait for a key signal breakout period like what happened at the end of 2020, because once that comes, it takes off very, very quickly. Like we can see from the history, we're basically almost at the end of 2022 and the worst year that we've had. So never before seen 4 negative quarters. The only other times we've had anything worse is through the previous bear markets, surprise, surprise, through 2018 and 2014. And then those next couple of years is going to be quite difficult. 2015, 16, 2019, and 2020. Looking at the total cryptocurrency market cap, excluding BTC and ETH, there's still a possibility of further downside here. So this is basically your altcoin market with stablecoins included. Current stablecoin valuations are around 140 billion. Current total is 300, so 300 minus 140 gives us about 160 billion. That's where we are sitting right now for the total altcoins, which could still give it a little more room to the downside for it to collapse. Even if altcoins went down, like we've talked about, another 30-40%, you could see these go down to about 100, 80 to 100 billion, with about 50% off, and then still have that 140 billion of stable coins. So 100 plus 140 gives you about that 240-ish level, and it brings us out to 200 here, or to this level at the previous tops at around 230, 240. So there still could be a little bit of downside here for altcoins, which is why it's still quite risky for those alts. There's still no sign yet. So that's one massive danger area for altcoins if you're wanting to invest in them. There's just no confirmation yet that their bear market is over. Not even Bitcoin's bear market is over. So DCAing these altcoins, extremely dangerous, but trading them, different story. We talk a lot about trading with our members. So if you're interested in that, go and check out the links in the top of the video description. This is our full investor accelerator program, over 100 hours of content, and of course, we do have a Christmas special coming up. So check out this link, subscribe to the newsletter, absolutely free. And we have the special coming out this week. There are a ton of reviews from our members, people who have made back the money of the course within their first month, just based off some simple TA. If you want to get involved in this before the market takes off, like we're seeing with a lot of these great opportunities in the market now, definitely go and check this out so you're prepared for that next bull market. Links will be in the top of the video description. Let's have a look at what the second biggest issue can be when it comes to DCAing or buying altcoins for an investment. Remember, we're going to split these up. Trading, absolutely fantastic. Get a ton of money from trading. Investing, you're going to get wrecked every single time. For long haul investments, wrecked, okay? The other thing to look out for, so if you don't believe me, check this out on the data. When you start to see these years go up in full green, you got 2017, massive green year, all green lights. You had 2016, some pretty good quarters, even though there were 2 red quarters. They were only very, very slight, 3% and 9%, when the other 2 quarters were up 60 and 58%. So some really good times there, probably the best there before you get to that end period. Of course, 2020, only 11% down in that first quarter, 42%, 18%, 168%. So some good times. When you start to see those years with really, really good times, the trading opportunities are abundant. Excellent opportunities for you there, trading. So like I said, top of the video description, learn how to trade with us. Don't get screwed in these markets like a lot of retail investors do. It's really, really sad. When you do see these years of extreme green, they are the worst times to be dollar cost averaging into cryptos, into altcoins, because it is almost guaranteed that that following year is going to be an absolute carnage year. So you can get through and just look at these quarter charts. Very, very simple. Anyone can do this if you have the time to bring up a website and scan it for about 15 seconds. You've got some very good opportunities here to make trades. Or when you see these extreme red years, you know that those following years, at least for Bitcoin, could potentially be good dollar cost averaging times. When those green years come, multiple green quarters, you've got 3 quarters here, potentially even 2 quarters, they're going to be those times for the trades. And if you come into the cycle late, like the absolute last year, maybe some of you guys came in 2021, let me know in the comments down below what year you started in crypto. If you came in 2021 and you look back and go, well, 2020 was all green years, 2019 had a couple of really big green quarters, I should say. And I'm in 2021 and we now have a massive green quarter, 1 red. This is probably not the time to be buying up for the long haul in the hopes of a $30 ADA or a $1,000 Sol or anything crazy like this. This is not going to happen, and have those stops in play. So something as simple as this Bitcoin quarterly returns chart, which will continue to update on the channel, so make sure you do subscribe and like the content, gives us some signals that maybe the market is overheated, some very simple and easy reasons as to why it could be overheated, that we're starting to see a lot of quarters in the green, therefore we have to have some red quarters. It could very well save you a lot of money, especially at those peaks in the market, and to have some stops in play so that you can get out of the market in case you do find yourself at the end of one of these cycles. Fortunately for us, we're at the bottom of the current cycle, and then potentially we'll be moving into the years of 2015 and 2019 into 2023, something similar to 2015 and 2019. So we can potentially see a little bit of troubles navigating these next couple of years. These are the most difficult, but if you can get through these difficult times in the market, then we have all of the icing on the cake to go from that point. These times you can learn to trade, you're going to be an absolute gun trader in the bull market and not just hope and pray to get into the markets. Trading does take a fair bit of time. You could be in the game 2-3 years before you get your head straight and how this works. So don't delay any of that. Of course, go and check out those links or find something else that suits you, whatever it is, prepare yourself. These markets do turn around, and before you know it, we'll be going through another major bull market, and you think, what the frig did I do with those last couple of years of opportunity? With that said, like, subscribe. I'll see you guys at the next video. Until then, peace out.